I felt the best way to show reportable payments was to actually put it in a visual document. Basically at the top we're going to have a planned payment. And reportable goes in two different directions. We'll go the direction of no for those that are not reportable. Typically those are going to be certain just plain project costs such as supplies. Some are reimbursements. And under the rules, with the IRS rules, we don't have to report any payments we make to an incorporated entity. So in those situations, there's no tax or reporting implications. But if we follow the yes side, it's where we have relationships and activity that match a payment classification. So my nice little diagram down there kind of is taking payment classifications and pulling them out and showing the 6 different payment classifications that we identify at the Research Foundation for reporting and tax purposes. You'll also notice that we've got services next to employee or an independent contractor side. So when we talk about these different type of payment classifications, we're talking about services and non-services. So the 6 different ones that we look at and report on are employees, independent contractors, fellows, something we call a participant stipend, or royalties or rent. If we're going to talk about reportable payments, we also have to talk about some miscellaneous taxable and reportable situations. The general rule that has to be understood that all amounts paid or items provided to an individual are basically taxable and reportable unless there's an IRS rule that exempts or excludes them from taxation or reporting. One thing I just also wanted to mention is that actually we'll just back up to it for a second. The items that would not get reported are going to be out of our accounts payable system. So our payment processing systems are our payroll system and our accounts payable system. The only type of payments that would be in that non-reportable side are going to be out of our accounts payable system. So those project costs, certain supplies. Just want to make sure we touched upon that. It's important as we move forward. So we talked about the miscellaneous taxable items. They typically are going to be something that you have to watch for out of the accounts payable system. So maybe you have an employee, but you're paying certain things out of the AP system. Well, you need to watch those to make sure that they're not taxable reportable items. So let's just mention the characteristics of these taxable miscellaneous items. The rules from the government are going to always start with cash equivalents, meaning something that's just like cash to the IRS. A perfect example is gift cards. Another characteristic is expenses that a person would normally pay themselves. Sometimes we hear about housing being paid for an individual. Well, if that's something that they normally would pay for themselves, then that's a taxable reportable item. Not to be misunderstood with situations where they might be have to have housing tied to the requirements of their job, but if we're all just going to pay somebody's rent, well, we got to watch that. That's taxable reportable items. Benefits might also not be directly paid to the individual. It might be such as an example where an employee has an agreement, he's coming on board, and some of the tuition for his child is going to be considered in that package. Even though it's not paying directly to the employee, it's actually the benefit to the individual student in this case, then that's taxable reportable income to the employee. And the last characteristic to always remember is that there's items that are provided via business but could or may lend to personal use. A perfect example of this is the personal use of a company vehicle. The key to all that is that you have to document personal versus business use. The personal use is taxable and reportable income.
So Ned, in looking at those last 3 bullets, if you're going to kind of overall try to figure it out, especially with housing or something like that, if you're looking at it, it would be, is this more the benefit of the employee or is it more the benefit of the employer that you might make some of these help make some of these determinations on whether it's taxable to that employee?
Correct, and that's a great point because it's not always clear cut. And of course, and something we'll always say is that, you know, if you're still not sure, you should contact us or the office at your location and figure it out. But yes, it's to look at, is it a specific benefit the employee's getting or something that they normally pay themselves. Mike's going to talk a little bit about business travel.
And the important thing with the business travel is to make sure you've documented everything properly. And of course, you know, it's keeping your receipts, everybody kind of gets that, but even something as simple as having an itinerary, particularly if you're bookending the trip. You're going someplace really neat, going at presenting at a conference that's in Hawaii or at Disney World. You're going to stay a few extra days. It's important to document, what was business and what wasn't. And so if you're questioned later, you can demonstrate, particularly with an itinerary, you can say who you met when, if you're leaving on a Monday instead of a Friday. So if there's ever any questions, you're not caught unprepared.
And one thing for everyone to remember is sometimes it's just taken for granted that business travel is always exempt, but it really is only applicable to service types of payment classifications, such as employees and independent contractors.